Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 energy stocks that just picked up buy ratings from a top-ranked analyst. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday. Today I was scrolling through the daily analyst ratings over on TipRanks. Looking at the most recent ratings from 5-star analysts, I couldn't help but notice there was a long list here from Neal Dingmann at Truist, updating a long list of energy stocks. So taking a look through that long list of recent buy ratings, we narrowed it down to 3 that also come in with a strong buy consensus from the rest of Wall Street. We're going to take a look at these companies, what it is that they do, and of course how all these analysts are weighing in on the stock's future. Now, Neal is a top-ranked analyst on the TipRanks platform. He is currently ranked number 2 out of over 8,700 Wall Street analysts with a success rate of 78%, and this long list of buy ratings came as the firm remains overweight on the energy sector given the solid 2024 commodity setup, lower potential oil field equipment and services pricing, largely continued routine operations for most companies in the group, and material continued shareholder return. Just before we dive into a few of Neal's recent energy stocks, this is your reminder to make sure you've downloaded the TipRanks mobile app so you can access all of your favorite investment research tools on the go. And if you enjoyed today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Now, jumping into these 3 energy stocks, first up, we're looking at Sitio Royalties. They trade under the ticker STR and are currently priced at $25.45 per share. The stock has gained over 13% in the past year and has climbed over 14% in the last 3 months. Sitio Royalties specializes in the management and monetization of mineral and royalty interests in the energy sector. Their core business model revolves around acquiring and holding interest in oil, natural gas, and mineral rights, allowing the company to benefit from the production and exploration activities of energy companies. By leveraging their extensive knowledge of the energy industry, they strategically invest in properties with significant resource potential, generating a steady stream of income through royalty payments. Focused on high-quality U.S. basins, to date, the firm has notched over 190 acquisitions. The company does also pay a quarterly dividend, with the most recent coming in at 51 cents per share for a dividend yield of 8.05%. That payment date just passed on March 28th. Their Q1 earnings report is due out in about a month on May 7th, and this does follow an earnings miss from their last quarter back at the end of February. For their Q1, analysts are anticipating earnings per share of 14 cents. Back in their Q4, they reported a loss per share of 47 cents. The company did announce a definitive agreement to acquire NRAs in the DJ Basin for $150 million, and that they closed on a previously announced sale of some assets for $114 million. The stock does just have 4 current analyst ratings, but comes in with unanimous buys. The average price target comes in at $28.33, which would be an upside potential of over 11% from current prices. Looking down below, we can see our top-ranked analyst Neal here. His price target of $32 would be an upside of over 25%, and he is the high-end price target, with our low-end coming with upsides of 6%. The second energy stock that Neal reiterated a buy rating on is Matador Resources. Their stock trades under the ticker MTDR, currently priced at $69.49 per share. They've climbed 39% in the past year, including growth of 25% in the last 3 months. Matador Resources is a hydrocarbon operator working out of Texas. Their focus is on natural gas, particularly unconventional plays. The company has active drilling operations in the Texas, New Mexico, Delaware Basin, in the South Texas Eagle Ford Formation, and in Louisiana's Haynesville and Cotton Valley formations. Supporting these operations, they work with a set of active midstream assets, including gathering and processing services for natural gas, crude oil transport, gathering activities for both crude oil and produced water, and third-party produced water disposal. Matador does also pay a quarterly dividend, with their most recent being 20 cents per share on a quarterly basis for a dividend yield of 1.05%. Their last payment was back on March 13th. They'll be sharing their first quarter earnings report in just a few weeks on April 23rd, and this does follow an earnings beat back in February. Analysts will be anticipating earnings per share of $1.53 for their first quarter, which is a slight increase over the previous year. During their Q4, they reported revenue of $832.2 million and earnings per share of $1.99, outpaced expectations by 20 cents per share. Management noted that they achieved another record quarter in the fourth quarter, which was another strong finish to a record year. They not only produced a record amount of oil and natural gas through strong well performance, but also steadily decreased their costs during the quarter. With 9 current analyst ratings, we have yet another unanimous strong buy. The average price target comes in at $74.22, which would be an upside potential just shy of 7%, but our top analyst Neal is feeling a bit more bullish. Once again, he's on our high end of price targets here with an $85 price target for an upside of over 22%. On the low end, we do have a buy rating here back from January with a downside of 10% that the stock has already surpassed. Now, if you've made it to our third stock, don't forget to hit that thumbs up button and make sure you subscribe to the TipRanks channel as well. Third on the list today, we have Kimball Royalty Partners. They trade under the ticker KRP and are priced at $16.14 per share. Over the past year, they've gained 17.5% overall, and in the last 3 months are up over 10%. Kimball is another company that focuses on royalties and mineral rights. They own land, wells, and royalty rights, allowing third-party operators to conduct the extraction business. They then receive the royalties on the oil and gas produced and use those funds to buy additional holdings. Kimball has more than 17 million gross acres across 28 states, and the company has a footprint in all of the major onshore oil and gas basins of the continental U.S., owning 129,000 gross wells. Similar to Sitio Royalties, Kimball does also pay a generous dividend. Their most recent quarterly dividend came in at 43 cents per share for a dividend yield of 11.15%, and their last payment was on March 20th. Their Q1 will be coming out near the start of May, and they do follow an earnings miss back in February. However, the quarter did have some record results. For their Q1, analysts will be looking for earnings per share of 21 cents. This follows the fourth quarter where they reported earnings per share of 14 cents, which did fall short of analysts' expectations. However, the company did see record Q4 run rate daily production and record Q4 oil, natural gas, and natural gas liquid revenue of $83.9 million, and that increased 21% year over year. Kimball Royalty Partners also comes in with unanimous buy ratings from 4 current analysts. And the average price target of $21 would imply an upside potential of 30% from current prices. Looking down below, this time Neal isn't our high-end price target actually. His price target of $21 would be an upside of 30%. TD Securities comes in a bit higher here with an upside potential of 55%. And on the low end, we have Bank of America with an upside just over 5%. So that is a quick look at 3 energy stocks recently rated by our top analyst Neal that also come in with a strong buy consensus. Of course, there was a long list of stocks that he reiterated some buy ratings on, so make sure you head over to TipRanks and check those out, and let me know which of those energy stocks has you most excited. I always love hearing from you guys in the comments. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are up to, so please make sure you always do your own research and due diligence. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.